of this is to make sure the setup you have for your trading. I want you to pick a currency, and that currency needs to be in dollars. Okay. Then I want you to pick a leverage of 1 to 100 and a risk lot of 0.01. Okay. You can ask me questions later, but I'm trying to preempt these things, so I'm explaining them as I go. All right. Then next slide. So with this setup, we will then go to our strategies that we have set up, which we all know, the sniper strategy, where we do pending buys and pending sells. Okay, and then we go to scalping. We do either the 1 minute. Okay, I guess I've never shown you well, 5 minutes. You've seen me do 5 minutes in some of the videos, but you can also do 15 minutes. Now, on the scalping, I told you before that the magic numbers, I'm saying recommended numbers, for you to use in terms of alignment is a ratio 4 to 6. So it can be 4, 5, or 6, which means if you want to trade the 1 minute, you can use a 5-minute candle to guide you. If you want to trade the 5 minute, you can use 5 times 5 is 25, the nearest is 30. You can do 30 to guide you. If you want to do 15 minutes, it is okay to use 1 hour. Now, one thing I must tell you openly is scalping is a bit interesting. The higher we go the time frame, the more accurate you are in terms of, see, we always trade what we see. So the higher you go, the better it is. So you're probably wondering, then why do I kill myself doing the 1 minute while you can do the 1 hour, using the 4-hour time frame? Well, for me, it's a matter of decision, because if I use the 1 hour candle to trade and use the 4 hour as a guide, yes, my trades will be a little more accurate. They will be better. But I might only be able to take a few trades and wait after an hour before I can take other trades. That's my problem. Not that I can't wait. Okay, for me, my strategy, I can't wait for 1 hour just to take certain trades. I need to be in and out of the market several times. I need to be able to log in, go in, out several times. So much so that the 1 hour and 4 hour does not augur very well with my strategy. Similarly, the 15 minutes. Now, for many of you who are still starting, you might want to consider, if you find the scalping a bit scary, the idea of scalping is scary, you might want to consider these higher time frames, even 5, okay, or 15, or even 1 hour, especially now that we're going into an interesting phase of our trading. Why? Because these ones are slow enough. They're not moving too fast. They're slow enough, okay? And if you do the principle we've been talking about in terms of trading, which let me repeat now in slow motion, and then I'll allow you guys to ask questions. The idea of scalping is when the market is going down, up, down, up, and you see generally it's on a downtrend, then you take advantage of the time it retraces. This is called retracement phase. When it is coming up, that's called retracement. Okay, it's coming down, then it goes up, but you know it's on its way down. When it starts going up, if you are on a 2 pip take profit, then you start trading after you've eyeballed. You see that this is about 2 pips from down here. This is about 2 pips. Then you can start entering your sells. Okay. Once you see, okay, the market is going up, 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 up. When it gets there, when everybody else is going up, for you, you start selling. Start selling. Okay, then you put a bunch of trades there at point X. Then you wait another 2 pips. Okay, hopefully the 2 pips will be somewhere there. This is point Y, which is also 2 pips, and hopefully point Z, which is also 2 pips. If you take a bunch of trades here, assuming you have in our 0.01 lot size in an $1,000 account, okay, this is where now it becomes, this is like inside information. If you know you can only take 20 trades, 20, okay, then what you do here, you don't spend it all. You don't do all the trades in one shot, because C-Trader is very good. It can even allow you to take all of them, but you spread them out. How do you spread them out? Details can be yours, but for me, if this is a downtrend and this is where I am, I know the market is going down, I mark a low and I mark a high. Now, the place where you're planning to be taking the trades will often coincide with other support and resistance within those levels. You can also use to confirm. However, try not to spend the whole 20 in this move up. My suggestion is at this point, you do 5 trades. At that point, you do 5 trades. And then at this last point, you do 5. So those are 15 trades, assuming the market keeps going up. But the beauty of this is then when the market comes down, takes your profits, the first 5 trades, takes your profit for the next 5 trades, takes your profit for the next 5 trades on its way down. However, as it comes down and takes your 5 profits, when it bounces up a little bit, if you want, you can take some more. You can take some more. As it comes down, you take your profit. All right. If it bounces up a little bit, you take some more trades. Okay. So you always make sure that you don't spend your all 20 trades available. Do like 3/4. Keep 5. 5 to allow you in the event that the market doesn't quite come back down here. It starts going, it breaks there and then comes back and starts going up. Now you need to change strategy very quickly from the sells to the buys. And that's where you need the extra 5. So that extra 5, ikikuja hivyo you realize it's coming back to retest, nianze kwenda juu. Okay, you start taking the 5, but basically you kill off this last 5 and so on. Until now you are sure that it's on an uptrend before now you kill all the other trades. All right? That is if the market changes on you. Now, does it happen often? Every once in every, let's say, 8 or 10 setups, it will happen. So it will happen. Sometimes If the guys have done scalping, they'll tell you that they started and then the market just decided to go, you know, to go north instead of going down the way you're expecting. And that's why I'm giving you this hints of what to do, how to manage that trade. All right. And that is for the scalping. But I encourage you guys to, even those who are not scalping, try the 5 minutes. The 5 minute one is very slow. Okay. 5 minutes and 30 minutes. All right. For the sniper trades, no problem. The only thing I'll say now is because now we have an account to watch. Okay. Surprise, surprise, we have an account to watch and we have money to watch. Before I had been telling you it's okay, you can put your your stop loss. I said take profit 10 pips. Stop loss 35. That's what I've been saying. Now, if you're doing a higher time frame, where a higher time frame now is the 30 minutes, the 1 hours, the 4 hours, okay, then the stop loss, you can bring it up a little bit. Sorry, you can bring it lower a little bit, okay? Because when the trades take an hour to set up and 4 hours to set up, you don't want a trade to break down and go all the way so that it can come back and go the way it wants. That might give you very huge losses. So most traders suggest this is your risk and this is your take profit. Sorry, take profit and risk down. They suggest not more than 1 to 2, which means if your take profit is 10, well, then your risk should not be more than 2 times that. Okay, especially when you start doing larger time frames. Better yet, you can look for the last low, which can help to guide on that. But then there are other traders who just look and put, if this is where you are entering your trades, this line here, they put like maybe 3, 4, 5 pips around here. They put their stop loss. So that if the market comes back, that's it. They don't want to be in that trade, Now, for the higher time frames, and I repeat, higher time frames, especially 1 hour, H4, daily, it is okay. It's okay to put a very small stop loss, tight stop loss. So that and then you don't have to watch it because most of the time, people who are trading these big time frames don't have time to sit down and watch the trade. So I'm just giving you a hint. If you want to trade the bigger time frames, either through scalping or the pending orders, do a higher time frame, but put very tight stop loss. That way you manage your risk. But for the scalping of less minutes, 1 and 5, I still propose 35 as long as you can sit and watch your trades. Okay? You do what is called trade management. As we go on, we shall be discussing what happens in the market because now we shall all have the same platform, we shall have the same lot size. So what is happening to somebody is more likely going to be happening to somebody and somebody and somebody. So our discussions will be a little more, a little more in sync. We don't want to have somebody talking pips, another one talking dollars, another one talking euros, another one talking, I don't know, Swiss franc, another talking Japanese yen. No. Let's all speak the same language. Then we can manage it. Effectively, if you have your phone, you're trading with your phone, please keep the results for yourself. That's yours. For this class, we want to share results that are coming from the platform. because we can then discuss them. All right. Now, our goal is to manage the $1,000 account. Now, this is not a sprint. It is a marathon. What am I saying? Don't be in a hurry because you will not double your account in one day. That I can tell you for free. It won't happen. It might not happen even in 1 week. Because if you are greedy, what will happen is you might end up having a good day, and the following day you'll blow your account. Somebody asked in the forum, how does one blow their account? Now you'll see it live. Why? Because now you know how to make pips. You know what you can do, which is good. But that comes with a price. And the price is you have to manage it. All right, I'll pause there and give you guys a little room for questions. Okay, questions?
Me, coach.
Yeah,
This is Brian.
Brian.
My question was when I'm using, for example, when I download the Citra in my phone, can I also post the results in the group?
No, unless you're able to post it. The C trader you have on the phone is a bit different from the one you have on a laptop. My suggestion is go to the nearest cyber because now this is a platform online. Okay, you log in using login details and you'll be able to trade for that short time and you're done. Sawa. So you go to a cyber,
So,
go to a cyber, log in with your details, trade there for an hour or two, okay? Set up your chart, whatever it is. When you're done, you just log out. When you come back tomorrow, the same thing. You log in and then you log out. Because the phone, as they have it, is not very friendly. And in fact, I've been looking at the phone app. Even getting the report on the phone app is a bit challenging. And that will cause a bit of confusion because others will be talking about, now this time, dollars. You will be talking about, I don't know, pips or something like that. And we don't want that. We all want to speak the same language. Then it's easier for me to manage the group. It's easier for me to manage the team because now we are all speaking the same language. So, if that is not possible, find somebody whom you can borrow their laptop for the purposes of trading. You go in and log in and trade. Ukimaliza, you log out. That's my proposal. Okay. Any other questions? Hello? Somebody asking? Is there a question?
Hi, coach.
Yes.
Vincent here.
Yes, Vincent.
Just on the sniper strategy.
Yeah.
Early in the week, what happened is you set up on both sides, so to say.
Mm-hmm.
And what happened to me in one of the cases, it went and triggered, but took no profit,
Mm-hmm.
and went to the other side and triggered and took no profit. So I was hanging in between.
Ah.
Um, I was in the trade on both sides, and I didn't know what to do. So early in the week, so what I did is I sent the stop loss to Mombasa on one side because I was stuck.
Yeah.
I wasn't sure what to do. So I just heard you say that you put a tight stop loss in that sense. Just explain that a little bit.
Okay. You'll find very many small details, which is good. Because then it makes you in charge, in control of your trade. Yeah. So by a tight stop loss, what I mean, a tight stop loss in bigger time frame is more realistic than in a smaller time frame. What do I mean? I mean like if the if you're taking 5 pips or 10 pips, okay, 10 pips, then don't put a stop loss of more than 10 pips. All right. So it becomes 1-to-1. In other words, the question then becomes if you're going to risk 10 pips, right? If you want to take 10 pips, then how much are you willing to risk to get 10 pips? So the answer is okay, if I'm going to take 10 pips, then I want to risk 10 pips. So 10 pips, 10 pips. Ideally, you should take 20 pips and risk 10 pips. Or better yet, you take 30 pips and risk 10 pips. But each of those cases will depend. The only thing I'm doing now, unlike before, I'm saying for longer time frames, because longer time frames means a lot of pips in between. And now we have a small account. A small account is only $1,000, which means you don't want the market to go against you and it runs for a while before it hits a stop loss. You want to decide very quickly, decisively, that if it comes against me, I'm out. In fact, other people are so precise. On a 4-hour time frame, they put like 2 or 3 pips right below their entry point. 2 or 3 pips. Now, to me, that's a bit tight, because the market, especially if you're in a currency that has a lot of wicks, okay. So if this market was going like this, okay, and you know now it's turning, okay, it starts here, and maybe you've entered somewhere there, then you put your 3 pips there. That's what they will do. Okay, it's a very tight thing, but it enables you to be out of that market very quickly in the event it goes against you. Now, for higher time frames, that is fine. Okay, but for smaller time frames, where small time frame is 1 minute, 5 minutes, okay, I don't know about 15, but these two, the wicks are very normal. You know, it's normal to work with the wicks. So you give yourself space. If you put 35, chances are, like Vincent said, you can see when the market decides to just disobey what you want. Then at that point, you deal with it. You actually kill it or whatever, you know. But that will be more of an exception than the norm. So smaller time frame, if you can sit down and manage it, keep your stop losses far. They become emergency. But for higher time frame, because you're not there to watch it, make the stop losses tight. By tight, I mean if the market was going up and you're entering trades, put 3, 4, 5 pips below it. Or angalia if there's any wick in the past. Okay, put it after that wick, a pip or two after that wick. I don't know if that is clear, but yeah. Vincent, I don't know if I've answered your question.
That gives a good guidance, eh?
Yes. Plus, most of these things, you'll see them several times in the market, and as you start practicing, you'll start realizing what really works. as you start practicing. Here, I'm teaching you guys to have a discipline. Remember, your number one objective is to protect that 1,000. I'd rather you don't make any pip in the whole day, but come out still alive by the end of the day. You want to keep that money. You want to protect it by all means necessary, which means don't take a trade just for the sake of trade. Don't say, oh, it's going down. Okay, I'm going to take. No, 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 no. No. This is the time you look and say, is that trade setup good? If I'm going to think of probability, what is the probability of that thing going down? Basically, I'm slowing you down. I know I'm slowing you down, but for a reason. I'm slowing you down so you can pause and think before you take your next trade. And eventually you'll start enjoying it. So I know you've heard me talk about my trades. You've heard about, me saying my goal is always just 1%. I don't know if any of you ever took time to think really what I mean by 1%. But what I mean, let me just share with you. See, some of the account for you now, your account will be $1,000. So 1% of $1,000 will actually be the equivalent of $10. $10 for the day. Trading at 0.01. Okay, with a leverage of 1 to 100. My friend, if you're doing $10 per day, now you are doing good. You're actually doing good. So don't feel bad if you're not suddenly getting $200 or $50. No, 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 no. Relax. Don't worry. Don't worry. Let's learn how to do this with a small account. Then the rest will be easy. If you can target for the day, just target 1% of 1,000, then you're okay. So, in other words, every morning, and this is, the other thing I forgot to tell you, very, very important. What will be happening is you'll be having what is called a compounding capital because we are dealing with an account, and every time you make profit, that profit adds up to your capital so that the following day you have 1,010. Now, for many of you who are mathematicians here, you will know what will be happening. So 1,010 will be second day. If the second day you make another 1%, you're looking at slightly more than $11 or $12. The third day you'll have 130 or something else. So your graph will be something like this. Slowly climb up, climb up, climb up. It's going to be exponential. It will climb exponential. So the first few days, it's going to look slow, boring, tiring. But when it starts climbing, you start wondering what's going on. Yes, that's the magic. In other words, hypothetically, if you do a spreadsheet and maybe try it sometime, if somebody was to give you a $10,000 account and you're still doing only 1% daily, then you're saying you are working with $100 on a daily basis. Well, not exactly $100 on a daily basis because it's $100 the first day of trading. The second day of trading, your capital has increased by $100. So you're going to be making like 110. The third day, your capital is increased by another 110. So you have 10,300. So your graph will look something like this. So if you'll indulge me, by the end of week 1, if you have more than $50, if you made more than $50 by the end of week 1, you are doing very good. I'm just throwing numbers out there to kind of give you, like, roadmap, what to look for. But if you get $5 day 1, don't kill yourself, because you'll have done about not 1%, you'll have done 0.5% for the day, which is good. So this is the way I want you to start thinking. I want you to start thinking in terms of calculating your returns, capital returns, on a daily basis. Because eventually, when you go to your real trading account, eventually, after you graduate from all this, your first priority will be to protect that capital that you have. Hence, plan it. Remember, Forex is not a sprint, it's a marathon. So you pace yourself. You say, I don't have the energy to trade the whole day, but if I can go in for a few hours and do at least 1%, get a 1% return, I'll have done very well. Very well. If I don't hit 1%, if I can get 0.5%, that is still good. So I'm sure you're wondering, gosh, I can do all this in one day. No, because now you'll be a little more careful about your entries. You'll be a little more careful about the trades you're taking. Before, we didn't really care. But now we are having to care. All right. Any other questions?
Good evening, Coach.
Yeah, good evening.
Good night.
Yes.
Yeah, so now in terms of reporting, will it be reporting on the number of pips you've made or the capital you have compounded?
Yes. Capital.
In terms of reporting.
Capitals.
Okay.
This time, I know you can make pips, so don't wow me with the number of pips. Now I want you to tell me, today I have made $10. Okay? Tomorrow or today I've made $4. That is okay. That anything above your original 1,000 is okay. So that the following day, that becomes part of your capital. And then you keep increasing it. And like I said, my suggestion is be a bit mean with your trades now. Unlike before, you just take, and you kind of knew that this trade I'm taking, but I'm not very sure. Okay, it might give me big losses. No, tomorrow, or rather from Monday, I want you to be a little more diligent. Take trades that you know you are likely to make. If you're not sure of the trade, don't take it. You know why? Because it will dig into your capital. And your capital will get less and less and less. Trust me. Many of you will have to go back and either set new accounts or request for the account to be reset. I mean, it's not the end of the world. I'm just giving you the reality. So let's try and build the account. So if you're reporting, you'll report. Today, I have made 3 pips. And trust me, that is good. That is good. I mean, not 3 pips, sorry. $3. That's what I meant. $3. So your report will be in terms of monies, in terms of the monies you've made. Okay? It is not a competition, it's not a marathon. As you're trading, your objective is to make the dollars but protect your capital. Remember, and this I have to tell you for free, it's very hard to lose, rather, very painful to make up for a loss, because now you're starting at 1,000. If you start digging yourself in the hole, you lose $5, you lose $10. Trust me, you'll have to make 10 times 2 to get out of that hole. I'm not scaring you. All I'm saying is be jealous in terms of protecting your capital. And that is part of trading psychology. Try as much as possible not to lose. If ukiangalia market and you look at things and say, this one I will not toboa, it's okay. It's okay to pass and say, now that one I didn't take it. No. But if you look at it and you say, wow, the way it's going, I think I can hack it. Those 2 pips here I can hack. Okay? Then take it. If you're not sure, chill. Otherwise, it's more difficult to dig yourself out of a hole. Very difficult, especially if the hole gets deeper and deeper and deeper and deeper. Any other questions? And don't be afraid. I'm not trying to scare you. No. This is just a demo account, really. Okay? Just a demo account. So don't be afraid. We will blow the account. We will start again. We'll blow the account and we'll start again. It's just that I think you guys have been lucky. You've been lucky because I've helped you get to a place where most of us don't get. Okay?
Coach.
Yep.
Yeah. As you were explaining something about when you're on scalping. This is Alex. Sorry.
Yes, Alex.
Yeah. So on scalping, and you indicated that you take your trades counter to the trend, basically.
Yeah.
And you talked of something like 2 pips as it's going up on retracement.
Yeah.
So I was just trying to check on some back testing. And I noted that for the 1 minute, it's on very rare occasions you would find the retracement has gone beyond even a pip, or it's just around 1 pip or something. How would you deal with that? Yes.
Maybe in that market it's not moving. Or the way you set up your chart. Because ever since Memorial, the market moves, especially Euro USD. I don't know which currency you're using it, but it could be Euro USD.
This is sorry. I think I was using JPY.
Okay. Well, I don't know.
JPY.
And also the time, because if you're going to be trading at 3 o'clock in the morning or 2 o'clock, then again you might not see movement. That's why I keep telling you guys, you can only scalp when the market is moving. The market moves mostly during the London Open and New York. Late in the evening, the market slows down. You barely get a pip. When the markets are moving so that the price cycle is less than 3 or 4 pips, then there's nothing you're doing. You better get out of the market and wait for the following day. So our time is up. Our time is up. Unless you guys have more questions, I can reset for more time. If you have questions, do you guys want me to reset or you want to try it first? Do you have any more questions? Or you want to go to the market on Monday, try? All right, I'll decide for you guys. You guys go and try, and then you can ask in class on Tuesday. So.
All right.
All right.
Okay.
Thank you, coach.
All right. Good night. Good night.
Good night.
Good night. Encourage your friends not to be afraid. All right.
Right.
All right.
Thank you
Tell,
very much.
yep. Tell them it's only dummy money. It's not real money. Yep.
It's a tough one.
Good night. Good night. Yeah.